Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Tuesday, the 31st of August. Starting off with Cyanconnode, where the shares are just pushing into new higher ground here, just breaking that old June resistance at 14 and a quarter. End of day close above that, or end of week close this week, should be enough to get the shares up to 18 pence by the end of next month, maybe up to 24 pence by October, if we can hold, the longer we hold above the 14 pence area. This stage generally back below 12 pence, really delaying the upside scenario. Should expect the shares to accelerate to the upside. Another stock where we've been waiting for a breakout has been DeepVerge, and here we're in this sideways consolidation since the beginning of the year, around sort of 25 pence to 35 pence mostly. Near term, we've got a trend line there, just looking for an end of day close above that at 30 pence, and also maybe the 200-day moving average currently rising at 30.5 pence. So a clearance of that area sometime this week should hopefully get the shares up towards the top of the range, 35, 36 pence area over the next couple of weeks, or at least the next few weeks. Good news today from Futura Medical, perhaps not quite the explosive share price reaction than one might have hoped for yet, but shares in a triangle here from February, and looking for a break of the 50-day moving average at, say, call it 41 pence, and that line of resistance from March, which is the top of the triangle. Weekly close above that, and we should be off to 50 pence relatively soon, maybe in the next couple of weeks. A bigger target, maybe by the end of the year, up to 85 pence, which is the top of that rising trend channel from February. So a lot to shoot for there. As far as the stop loss is concerned, ideally the shares don't have any sustained price action now below the 200-day moving average at 32 pence. I think that would be disappointing if we fell below that. Looks quite unlikely though at this point. On to Hurricane Energy, which has obeyed one of the technical rules, old resistance becoming new support, so around the 2 pence area, that peak in May, and bouncing off that earlier this month. Looking for, I suppose, well, we've already had at least an initial positive reaction, so we're up nearly half a pence off that low, but what would hopefully accelerate the price action here would be an end of day close above the 50-day moving average at 2 3/4 pence. That's also the area of the 200-day line as well, so double resistance there, but if we can get through that, we're back with the idea of a retest of the 4.5 pence to 5 pence area, maybe by sometime in October. Moving along to a stock which perhaps has been rather unkindly treated by the market to date, despite today's or the latest announcement or confirmation of Piedmont and its $102 million, which is always nice to have in the back pocket. Here we've gapped up through the 50-day moving average at 21 pence and looking for an end of day close really through 25 pence. I think if we can get that, or a weekly close above 25, then the share should head up to 35 pence. Hopefully as soon as the end of next month, i.e. September. Only really back below 21 pence, delaying the upside scenario for IronRidge at the moment. Core Potash in focus as well today. Here you can see that the shares are making good progress after breaking that, so the end part of that very narrow falling wedge, which they did around 0.7 pence, so good progress there. While we're above the 200-day moving average at 0.9 now, looking for the stock to fill the gap from April up towards the 1.2 pence area by the end of next month. The longer term target, maybe 1 to 2 months, up to 1.6 pence, which is that July resistance line from last year. Moving along to Nano Synth. What's interesting here is that the shares managed in June to deliver an island gap bear trap, and then rallied up to 1.6 pence. Exactly the same setup for August, so there was the old 0.7 pence support that was broken briefly over sort of 2 or 3 sessions, and the shares gapped up and spiked up again. The call previously was that we could head up towards 1.6 pence on any end of day close back above 0.7, which so far we've got up to around the 1.4 pence area. If you're not so certain of the technical credentials of the shares at the moment, then keep an eye on that resistance line there from April. That's at 1.4 pence. That needs to be broken on an end of day close basis to end the near-term bear run for the shares. I mean, obviously we've had a decent bounce so far, but 1.4 pence probably the last chance for the bears in the near term. If we break that, then probably we'd be heading for at the 2.2 pence area, which was April resistance. So plenty to look out there. Otherwise, while we're above the 50-day moving average, currently now rising at 0.95, it looks as though Nano Synth is in rather better technical form than it has been for quite some time. Another stock where it was suggested I was wrong around the mid-40s is Omega Diagnostics, and I think perhaps the only thing I was sort of wrong about there was that I was probably not bullish enough on the shares. The current situation is that we seem to be heading towards that 200-day moving average at 66, something I tweeted out about a week ago. So hopefully we can see that by the end of this week. A weekly close above 66 though could get us up to 80 pence, which is that May resistance line on the top of the triangle in place since February for the stock. Bullish here while we're above the 50-day line at 50 pence, particularly bullish while we're above the initial resistance of 54.5 that we had after the shares broke that line of resistance from June. Moving along to a stock which has had a decent charting look for the last month or so, really here, Prospects Energy. Here you can see that the stock's been crawling along the 50-day moving average. That's currently around the 2.8 pence level. We're in a rising trend channel from back in November, top of the channel heading towards as high as 6.5 pence, and that could be seen maybe by the end of October with the current rate of progress. It would be nice to see a weekly close above that July resistance at 3.65 pence, which seems to be possible despite all the controversy surrounding the company at the moment, but at least the technical is currently looking strong. And I suppose the golden cross that we had, the golden cross buy signal that we had between the 50 and 200-day moving averages in July was the first sign that the shares were ready to start a decent bull run. Onto a stock which has been hit rather hard over the recent past, Predator, but it looks as though we've got the first signs of a recovery here. I suppose the initial thing here is that old resistance previous to the rally was around, I suppose, the 3 to 4 pence area. The recent support has been around 4.5, so that is a plus. Looks like we've also broken a relatively obscure resistance line there from July around the 5 pence level. That's been broken today, and above 5 pence looking for the 50-day moving average as high as 7.4 pence perhaps over the next 2 to 3 weeks. The other plus, I suppose, that we've got over the near term is that the shares have come off a very oversold RSI. That was around the 15 level, and anything under 20 is extremely oversold. And even though we made sort of new lows or narrow new support lows there for the shares, since then we've got some bullish divergence coming in with the RSI starting to climb. So that's looking rather more encouraging there. The only thing I suppose which is missing, it would be extra volume coming in there. We haven't really had strong buying volume since that decline at the beginning of July. On to stock which has been perhaps almost as problematic as Predator in the near term, UK oil and gas. Here we've got a spike towards the 50 and 200-day moving averages at 0.17, so that is the initial target here for the shares. Also, we had bullish divergence, so we had a lower second low there for the stock in the middle of the month, but it was matched by a higher RSI low. End of day close above the combination of the 50 and 200-day moving averages at 0.17 rather, could take us up to fill the July gap down that we had there up to the 0.22 area, maybe by the end of next month. Obviously, at the moment, though, anything below the existing August low at 0.127 would change the picture, but so far looking quite encouraging in relative terms for UK oil and gas. Stock where the social media Twitterati seem to have got it right is Vela. They were singing the praises of the shares as a recovery situation a few weeks ago, but we managed to break that line of resistance there from February. That was around 008, and we're holding over the last few sessions above June and July resistance at 009. The longer we stay above 0.09, the greater the chance of maybe a 2-month target here as high as 0.16 on a breakout to retest. I suppose that's a 1-year resistance in that area. But the bull argument or the recovery argument very much in place while we're above that broken resistance line from February. Finishing off with a requested stock, and here we've got Wishbone Gold. The situation here is that we managed to break that line of resistance there from June. That was around the 9 pence level. Longer we stay above 9 pence, the greater the chance of a move maybe towards 13 pence by the end of next month. If you're not so sure about the situation, maybe wait for the 50-day moving average at 11.3 pence to be broken before taking any potential action on the shares. That's it from me today. More updates tomorrow.